Well, time for our special segment, charting trends. Markets looking good, but where do we go from here? What kind of upsides should we project, and what kind of positions should you be trading? Rahul Sharma is Director and Head of Technical and Derivatives at JM Financial Services. Mitessh Thakkar, of course, is with us as well. Gentlemen, good morning. Good to have both of you here. Rahul, let's start with you on Nifty. After what we've done, what's your expectation? Are we really going to break out of this congestion zone and, head substantially higher? What's the view?
Yeah, very good morning. So we have been cooling off after we hit the 18,778 mark, post which, in fact, the consolidation is actually technically very healthy. Now, the key level to watch out for, especially in this week, since we also have the Fed event lined up, with the probability of 72% being paused in a rate hike. So I think 18,700 should be kept an eye on. 18,700 once taken out should call for a new all-time high anytime soon. I think 19,000 is a very reasonable target to have for the current setup. What is crucial as a support is 18,464. As long as we stay above that, the higher high, higher low structure of the market will not be challenged. And we feel that sooner than later, this breakout should take place. Now, a couple of reasons for this. One is obviously the cash-based buying that we've seen, especially from the FIs in the May. We saw a healthy figure from the FIs in cash. It is continuing in this month as well. And secondly, there is no decisive stance taken by any of the institutions in index futures. So you have FIs, DIs, retail, even the prop sides, no decisive shorts being created in the index futures, in spite of the Nifty hitting almost like a new all-time high. So my sense is the market still has room on the upside. Second indicator that we closely track is the market breadth and thrust indicator. So clearly, the health of the market has improved as compared to what we were a few weeks back. And as we've gone up higher, the participation, especially from the mid and small caps, has been pretty comforting. And at the same time, we also believe that it's a good time to take profits in mid and small caps as well. Now, clearly speaking, the mid and small cap indices, the daily RSIs are above 85, 86. It's a good time to take profits because we've seen the kind of rally that we've seen, and a pullback is something that would be ideal for a re-entry. So a couple of sectors which look overrated to us. One is auto. Yeah. Auto has seen the time of its life.
Just 1 minute, Rahul. Reality. Rahul, you've sent us a lot of charts. You've sent us charts on PSU banks, metals, the autos, FMCG. But you mentioned mid-caps. You're saying that you should take profits. So if you can have that mid-cap chart up. So just very briefly, just talk to us about that. The Nifty mid-cap 100 chart is what you've sent. Yes.
Yes, so, all the sectoral indices, auto, reality, mid and small caps, these are the 4 sectoral indices which have performed the best in the last, since 28th of March is where the entire rally began. So in this entire period, mid caps and small caps indices have actually achieved their targets technically. RSIs are very overrated. In fact, if you see long-term charts of these indices, every time the RSIs have gone above 85 and above, it has been a good time to take profits. I think this time also around should not be any different. And from a relative scale, I think it's better to switch money from mid and small caps to some of the other sectors like PSEs, PSUs, as well as metals, which has been a cyclical play. So too hot mid small caps, auto and reality. Sectors which can become hot are the ones which are PSEs, PSUs, as well as metals.
Okay, PSEs, PSUs and metals are what you like. Got that. Mitessh Thakkar is also joining us now. Mitessh, take us through some charts, right, stock-wise. What are the stocks where the charts are looking very bullish, and not just for an intraday trade, but like a positional view?
So, I think my broad call is that the Nifty and the Bank Nifty, both the indices will make a new high, but the outperformance might shift to the mid-cap side. So I have picked up stocks from that sector. A couple of them, when we are looking at very strong breakouts taking place on either the weekly or the monthly charts, supported by rising indicators on the monthly basis. Our indicators will be typically 8, 10, 12-month kind of indicators. And if they get into rising mode, they typically last for about a few months, at least on the lower side, to a couple of quarters on the upper side. So in that sense, I think, all these stocks which I'm covering, I'm looking at a slightly 6 to 9 months kind of a minimum horizon, but maybe, slightly longer time horizon. And I think these stocks will give you 30-40% plus kind of returns. So the first stock on my list is AU Bank. It's broken out of a contracting movement last month. The 690 was the breakout level. The measuring targets of the pattern suggest 960 to about 1000 as the target area on a normal basis. And I think, very clearly 690 was the breakout level, as I mentioned. So 675 becomes your stop loss, and any declines, if there are about 20-30 point kind of a decline, a pullback or a correction, I think they would be welcome opportunities to add on to your long positions. The second stock on my list is Prestige Limited. It was making a rectangular pattern on the monthly chart. It's broken out in this month itself. So while we haven't got a monthly closing, the setup suggests that the breakout is very likely to succeed given the price and volume action, the increase in delivery volume numbers, as well as position of the indicators. Again, here I would look at targets of 690 to about 700 on a normal basis, and 490 was the breakout level. So 480 or thereabouts can be your stop loss, and people can buy now, accumulate on a mild decline to about levels of 545. The third stock on my list is Tata Communication. It made a double top pivot kind of pattern in 2021 at about levels of 1440, and we've just started breaking out of that pattern. The target over here is very aggressive. I think I would look at a target of around 1800 to begin with possibility of 2000 also being tested over here. And a stop loss of 1400 is what I would recommend. And the final stock on my list is Astral Limited. Again, a contracting triangle pattern on the monthly chart. It's broken on the upside. The minimum price targets or measuring targets would be around 2150 to about 2180, with extended targets of possibly 2400 also, a good probability. I think very clearly it's a buy at current levels, accumulate more in case you get mild declines to about levels of 1850, 1875 zones. And I would look at targets of 2150 to begin with possibility of 2400.
All right, thanks a lot for that. Rahul, very quickly before we let you go, anything else that catches your eye in terms of a big upside on the charts?
Yeah, so technically speaking, NBFCs have seen a pretty good traction today. Muthoot Finance is one setup which has broken out from its consolidation. We feel there is a quick 8 to 10% kind of a potential from these levels. Apart from that, IT as a sector saw a very good reversal happening yesterday. I think Persistent is one stock that we like at these levels, can easily deliver a target of around 5400, 5450 on the upside. Can be bought the stop loss placed at around 5900. And overall, we feel that, from the auto ancillary space, Bosch is another setup which has seen a good traction happening today. So this stock can also be bought for a new all-time high target of around 20,000. Stop loss can be placed somewhere around the 90,000 mark. And these are some of the names which we feel should outperform going ahead into the next few trading sessions.
All right, gentlemen. Interesting charts and interesting discussion as always. Rahul, thanks for coming on. Mitessh, thanks as always for being here and highlighting those setups. So that's chartically speaking, in terms of how markets are set up. 95.